Hello friends, in this video we will learn the textbook question and answer of the 7th unit of the social science textbook of 8th standard SSC board Telangana and Andhra Pradesh. The name of the lesson is Money and Banking. In the pictorial representation you can see the bank in the middle, and here you see some people depositing the money. And this money, a part of this money is given out as loans to some people here. That is a loan, that is home loan, vehicle loan, car loan, and all the same. The money, a part of the money which is deposited by some people is given out as loans. And the people who are borrowing from the bank, that is who are taking loan from the banks, they repay the loan amount with a little bit of interest. Here we can see this, people pay interest. So this interest, whichever is coming on the money which is given as loan, is the revenue, is the source of revenue for the bank. And from that the bank gives a part of it to the people who have deposited the money. Here we see this arrow mark, people get interest. The part of the interest which they have earned from the people who have taken the loans is given to the people who had deposited the money. Okay, now let's get into the question and answers. The first question: can there be any difficulties or disadvantages in keeping money in a bank? Think and write. No, there cannot be any difficulties or disadvantages in keeping the money in a bank. Saving money in the bank fetches us interest and keeps our money safe. So, keeping the money in the bank is the right way to safeguard our money. It is the secure way. On to the second question. In what ways have checks made exchange of money more convenient? You all know checks. Checks means there is a foil or there is a paper, the check foil on which the money which we are intending to give to the others, it is written on that check foil and it is given. Instead of giving the cash, how much money we want to give, we write it in the check and give to that person. Yeah, and they can go at their convenient time. Whenever they want that money, they can go and encash it. Right, how these checks are useful, how this have made the money exchange convenient, this we will discuss. The check is a written draft to enable a person to withdraw money. By using the check, account holders are able to make cashless transactions. That is, the money is given, the money whichever they have to give, that is given, but the cash is not given here. The value of the money is written on the check foil and given. So this comes under cashless transaction. The transaction is done, but the cash is not used here. There is no need to take the risk of carrying a huge lot of money. Just they can take the checkbook and whenever they have to give the money, they can write the check and give to the concerned person. The risk of taking the money, carrying from one place to another, saving it, safeguarding it, those all risks we are avoiding because of the checks. There is no wastage of time in withdrawing the money and giving it to the concerned person. When some money has to be given to a person, there is no need to stand in the queue in the bank, withdraw the money and take the money and give to the person. We can simply write the check and give to the concerned person. So in this way, the checks are useful. On to the third question. Only a part of the total deposit is kept as cash in the bank safe. Why is this so and how does this benefit the bank? As a bank has to pay interest for the money deposited, that is, some people have deposited money. For that money, the bank has to pay some interest, and it has to maintain the whole infrastructure and pay the employees. It has to generate income from the money deposited. So in order to do all these things, the bank needs money. It has to generate some revenue from the money which is deposited. So the bank offers loan to the people who in turn pay these loans with interest. So what the bank does is it gives loans to the people, and the people whoever are borrowing the loan from the bank, they repay the loan with some interest. The interest earned on loans is a source of revenue for the bank. Whatever interest money the bank is getting on the loan, that is a revenue for the bank. Now, if all the money is kept in the bank, no income will be generated. Whatever the people had deposited, if they keep everything in the bank, there won't be any extra income generated. So, giving the interest to the people who have deposited is not possible. So, they offer some of the money as loans to the people and generate the interest. So, only a part of the deposit is kept as cash in the bank safe, and rest of it is sent to generate some revenue. On to the fourth question. If many loans are written off, how will this affect the working of the bank? What do you mean by written off? That is, the borrowers are not required to pay back the money. Okay, if many of the loans are written off by the government, what will happen to the bank? That is, some borrowers have borrowed the loan and the government is writing off the loan and telling the borrowers not to pay the money back on certain circumstances, certain situations where the borrower is not in a condition to pay the loan back. What will happen to the bank? What will happen to the bank? In which way will it affect the bank? If many loans are written off, it causes huge loss to the bank. It can't pay the depositors the interest, can't maintain the infrastructure, and can't pay the salary for the staff, and it faces huge loss. If the total amount which was written off by the government is given to the bank, it will benefit the bank. Okay, so if the loan is written off, whatever loan it has given to the borrower is not coming back to the bank faces a huge loss. So it cannot pay the interest to the person who has deposited and maintaining the infrastructure, the rent for the building, everything it faces huge difficulties. If at all the government gives the bank the money which it has written off, the bank will be benefited. The bank can go on with its work. On to the fifth question. Read the paragraphs under the heading Types of Loans and answer the following question. What sort of loans are more common in your area? The types of loan that are common in our area are home loans, educational loans, gold loans, personal loans, vehicle loans, and loans against property. That is, home loans means in order to construct a home, they need money. For that, they apply for loans in the bank, get the money and construct the house. Educational loans is for higher education, more money is required. Again, they apply for a loan in the bank, get that money, then spend it for education and again repay it back. Gold loan is they deposit the gold in the bank, and for that value of gold, whatever loans they can take, they take and use it for their requirement, and later on they pay back the money and get back the gold. Okay, so these are the various loans that we see more prevalent in our locality. On to the sixth question. Suppose this year the rainfall is poor and the crop yield is only half as much as was originally expected. Some argue that farmers should be asked to pay back only half the amount they have taken as loans. Others argue that full amount should be repaid, keeping in view the next year's crop. In your opinion, what should the bank do and why? So here the rainfall is poor, that is the drought condition is there. So the yield is very less. So what should be the solution? What should the bank tell? Should it tell them to pay half the money, or should it ask them to pay the full money? So let's see. If the drought is partial, only a part of the rainfall is less and a little bit of yield they have got. If the drought is partial, it is better to write off half of the loan amount. We can't tell them to pay the whole money. It is highly impossible. So half of it can be excused and half the loan amount we can demand them to pay. In case of severe droughts, if the drought is very severe, the farmer is completely in a devastative place, is completely at loss. At that time, what to do? In case of severe droughts, the total loan amount can be written off by the government so that the farmer can cultivate the crop in the next year. That is, whatever money he gets, if the drought is very severe, only little money he might get. And if he has to pay the loan back, whatever little amount also, he won't have any money for the next crop. So, whatever little money he might get from the available crop, that he can use for cultivating the crop in the next year. So, this is what the bank can do. On to the 7th question. People have to pay a higher interest on loans than the interest they receive on a fixed deposit for the same time period. Why do you think this is so? So, fixed deposit means a money is deposited for a particular period of time, and after that period of time only the money can be withdrawn. For that, the bank gives some extra interest for that money. That is called fixed deposit, but the interest which the bank gives is very less. Whereas the same period of time, if any loan is taken, the rate of interest is high. Why is it so? The rate of interest received on fixed deposits is lesser than the rate of interest on loan because the bank has to get some profit to pay salary to its employees, to maintain the equipments, pay rents, and to set up branches in rural areas. So it has to provide a service to the rural areas, and it has to maintain the bank. For that it needs some money, and that money is generated from the interest which is charged on the loans. If the rate of interest on loans is not more than the rate of interest on fixed deposits, the banks cannot work. They may go into loss and may be locked out. So, if both are equal, or if the rate of interest on loan is less, the bank cannot get any profit and the functioning of the bank might be a problem. On to the 8th question. Do you feel that the loans taken from SHGs, SHG means self-help groups, are helpful to the members? How? Self-help group means 10 to 12 women. They gather together, form a group, and they all deposit some money, and whoever is in requirement, they take the money on loan and pay back the money with a less interest. And even the banks offer some loans for some self-employment, for some cottage industries and all. All the women together, they take this money and distribute among themselves, again repay the money to the bank with a less interest. This is the functioning of the self-help groups. Are the self-help groups useful, or the formation of the self-help group, is it helpful to the members? How? The loan taken by SHGs are given on very low rate of interest. This helps the women to utilize this money to establish small-scale industries, cottage industries, and self-employments to help them get rid of poverty. This provides livelihood to many people and brings about financial empowerment for the rural women. It helps to fight against exploitation, gender discrimination, caste discrimination, and poverty. The loans which are offered to the SHGs on low interest helps the women at the downtrodden level, at an illiterate locality in the remote areas of the country. It helps them to come to the mainstream, helps them to come to the higher level through the money they earn through the self-employments or through the small scale or the cottage industries they establish by getting loans from the bank. Hope this session was useful to you all. I do believe that you have understood the system of banking and how the bank works and what are the problems it faces and how all we can be benefited by depositing our money in the bank. I do believe you too will save your money in your bank and be profited in your future. Thank you for watching and have a great day ahead. Do subscribe, click the like button and share with your friends. I'll be happy if you leave a comment in the comment section. Thank you.